Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram and Justin Nielsen here with a look at the action in today's session and this week. Today, Friday, July 19th, where we saw a bad week end on a sour note. Justin, we've got a lot to get to. We're going to talk about the week's action, stocks on our radar, go through a stock list or two, some ETFs, and a historical precedent. So a lot to get to.
A lot to get to, and we'll talk about a few stocks as well. Now, look, tech is not where it's at, but we'll look at Wabtech, which is not quite the tech that you think of, also AppFolio and the Bancorp in terms of some of the stocks that we'll cover.
Yes, a lot of rotation continuing this week, which we will give our take on. So we'll get to those stocks, but first, let's take a look at the major indexes. Here's a look at the NASDAQ, another down day today for the tech heavy index, continuing its slide below 18,000, down another 0.8% today. The Dow was the hardest hit of the major indexes in today's session after a downside reversal off highs Thursday, a decline of more than 0.9% Friday. Then the Russell and the S&P 500 were both down 0.7% today. Here's the S&P, tried to find support at the 21-day line on Thursday, now below that level and at a key psychological level that we previously talked about in the past. And here's a look at the Russell, which I mentioned. Really the hard day for this small cap index was on Thursday, but that's after a big move. We could talk a little bit about the 50% retracement stuff, Justin, with that one. But first, let's take a look at the NASDAQ. What do you make of this 3-day slide?
Well, I mean, things really kind of turned on July 11th, and we had been saying that the index was extended, right? It was up like 9% above its 50-day moving average line. Now, that doesn't necessarily mean that you just sell everything and panic or anything. But what it does mean is that you have to be kind of looking for the exits at that point. The party may be ending, the police might be coming, and you just want to know what's your getaway here. So I think that was very clear on July 11th. And as it came down very sharply, there was a little bit of a 3-day rally at kind of suckered you into thinking, oh, maybe this isn't so bad. And then you had another whoosh down with the gap down. In fact, one of the things I was talking to David Ryan, 3-time U.S. investing champion, and also a protege of our founder at Investors Business Daily, William O'Neill. He was on the podcast this week, and he kind of brought this up as a potentially reverse follow-through day. So in the same way that a follow-through day, this is our signal that an uptrend has started. You have typically a downtrend first, you have a rally day, and then you're looking for a day of follow through where the stock market is up significantly and volume is also higher than the day before. Now, a reverse follow through day, we were kind of musing. You got the down day on July 11th. It didn't undercut, or it didn't surpass the highs in this case. And then you got the day down, the gap down with volume coming in a little bit heavier and also taking out the 21-day moving average line. So all of that kind of says, hey, there might be some more weakness to come here. And it certainly has so far. Now, the one thing I will say that kind of was a weird twist here was just how strong the Russell 2000 and the Dow Jones Industrial Average were coming out as all of this was happening. Look at Thursday for the Russell 2000, because the Russell 2000 on Thursday, that July 11th, was up
a seismic
phenomenally.
Shift.
Yes, 3.5%. And this is after, as you were showing on the weekly chart, that we had been kind of struggling around this 2000 level for a very long time. I mean, years now. And then it was really kind of a very change in character. So that was something that looked very different, where it was a big shift from the mega cap, the $1 trillion companies, to the small cap companies. And you kind of have to put in the context here that the 10-year treasury yield was something that was a driving force behind this. If you look at the daily chart and you kind of go back to that Thursday, look, we had the CPI report. It was showing that, hey, things are slowing down on the inflation side. So that was a positive. and the 10-year treasury came down quite a bit, that is beneficial to the small cap companies. And also, we've been seeing that the inverted yield curve that we've been talking about for years now, that difference, especially between the 2-year and the 10-year, that gap started narrowing. It's been a pretty big gap. And so that kind of started helping there. And that's helping a lot of the financials. But what I didn't like is, for as much power as there was, it was a little disconcerting to see everything come down at the end of the week here.
Mhm. Right, right. That was one of the things that we were saying. If you look a week ago at our reporting, okay, we have this huge shift in tone, massive rotation. What happens the following week? That could be almost telling, almost as telling, right?
Yeah.
Can we see that strength hold? So, it's a couple of bad days doesn't mean
Right.
that this is now over, but it's
Hmm.
it's not like we had that, okay, we've got some orderly tight action now after
Hmm.
that strong move, which, if you're talking about an individual stock, that's sort of your ideal bullish scenario. So we did give back some, but in terms of what one might expect of a retracement of the move, something that you and Mike Webster, our senior market strategist, like talking about is the 50% retracement as sort of just your baseline expectation, and how a stock or ETF acts around that 50% retracement. So can you talk a bit about that, Justin?
Yeah. So, I mean, right now I'm kind of using the close of the Wednesday, take that all the way up to the high of Wednesday of this week. And, you just kind of draw the halfway point. That's going to be around 2,140 and change. So you're right. You're still well above that area. So exactly as you said, Ali, this is not like, oh, panic. There's a couple things to learn from it. Number one, look, when this was skyrocketing so much, if you got in on Thursday, you're fine. If you kind of got in as you were crossing that
Last
30,
Thursday, you
yeah,
mean?
last Thursday. Yes, thank you.
I knew what you meant.
Yeah, 2135. If you were getting there, as it was crossing that level, you were fine. But if you were buying this week,
Right.
you were late. It was
Late to the
stretched.
party.
Yeah. So you have to be very careful of not chasing things, no matter what kind of shift. Now, look, this could be very early in the shift, but the
Mhm.
last thing you want to happen is to kind of get into a stretched position. That's where you start adding, and then it's hard for you to hold your position as stocks, come down, or as the index comes down. So, especially if you are using something like TNA, which is the triple
Mm.
leveraged of the Russell 2000. I mean, look, just the unleveraged version, you were seeing gains of 3.5% in a single day. And you put that on the triple leveraged, and now you're talking about some real damage to the downside when this
Mhm.
starts coming in.
Yeah. Okay. Well, let's also take a look at the S&P 500, Justin, coming down below the 21-day line and that 5,500 level. Your thoughts?
Yeah, so at first the S&P 500 has been a little bit stronger than the Nasdaq. Look, it has still that big mega cap weighting. A lot of those trillion-dollar companies are very heavily weighted in the S&P 500, but it is a little bit more broad out there in terms of having some financial exposure, and the financials were doing well. Oil, just other non-tech areas that can kind of help cushion the blow a little bit. And what was really interesting to see here for both, not as much the QQEW, but really RSP, which is the
Mhm.
equal weighted S&P 500 ETF, how powerful this was and how strong it looked as this was kind of coming out from a breakout. And also, let's not ignore that relative strength, how it
Yeah.
has been in such a downtrend and then shot up. And it was so odd to see how many times there was the Nasdaq Composite coming down, and the advancers versus decliners very strong.
Right.
RSP up very strong. So it was a very unusual thing. And then again, the Russell 2000 being up 3.5%. The Dow Jones Industrial Average getting to new highs during this whole time. So a very divergent market, and the fact that, again, the market cap weighted way of calculation is just very skewed right now to these trillion-dollar companies. And so that can really help the indexes when those are in favor. And it can, as we are seeing right now, it can really hurt the indexes when they're not.
Right. So QQQ, in terms of the weekly performance here, down almost 4% on the week. SPY this week down about 1.6%. IWM, tracking the Russell 2000, off of highs, but still up on the week by about 1.7%. The Dow, meanwhile, up 0.7% on the week. Mid caps, we can take a look there too, reversing lower on the week, down 0.3%. We're going to circle back later on in the show, give a precedent update focused on the NASDAQ. But we've got a lot of sector and thematic ETFs we want to talk about, Justin, starting with
one more thing I want to just
One
mention
more thing. Go
before we
ahead.
kind of move on to that is, just to kind of put this in perspective, the move lower here over the last 3 to 5 days, we're really kind of talking about enough damage that we really haven't seen since, well, I mean, there was that April. I mean, if you go to that April, again, where we thought it was just a little bit excessive compared to what we were expecting there. But then beyond that, you're really kind of going back to 2022. The end of 2022 there. So again, this is just to kind of put it in the perspective. Yes, this is a hard hit. So if you felt it in your portfolio, you're not imagining things.
Right. I mean, things always look the best from the top, right? Right, Justin? Things were feeling pretty good a little over a week ago, but when things start feeling too good to be true, that's when my spidey signal goes up for sure.
And it's also, keep in mind, it's look, this is something that we were saying for a while, right? Where things were feeling extended, but then we would kind of come in a little bit and it's like, okay, well, it's not as bad, but then it would very quickly get extended again. So you have to be aware that there might be a long time in which you feel like things are extended before you actually see things get a little bit ugly.
Right. Okay, now let's take a look at IBIT representing the Bitcoin trade. Look at that turning on today. When we were looking at it on IBD Live, it was just starting to perk up a little bit after a couple of tight days, of course, followed by a lot of money flowing to this area in recent days, then tightening up. And an actionable opportunity here today, Justin. IBIT up 6% on the day.
Yeah. So, I mean, certainly one of the things that kind of started this move, the conjecture, of course, is that after the assassination attempt on Donald Trump, that look, his chances of maybe getting into the White House again went up, and he is cryptocurrency favorable. And so that was something that did see a gap up for IBIT. And Republican National Convention going on this whole week. Maybe that's just something that kind of continued to fuel some of that. Gold, by contrast, if you look at GLD or GDX, not as strong, lately. Whereas again, a lot of times you think of gold when there's uncertainty. A lot of times gold gets a little bit more favorable, and we were seeing that to a degree with Bitcoin as well. But I think there's something else going on here. And again, it's maybe a little bit more because of the favorability that Donald Trump finds with cryptocurrency. And that's what the market could be speculating on right now.
Right. Exactly. And this isn't unique to this presidential election cycle. We've seen this in the past, whether it's in the lead up to the election itself or once a new president is in office or even reelected, their policy and the headlines around their decisions, kind of like the Fed, right? What Powell says, that's going to move some things. Now people are speculating. Whether it's a beneficiary or industry groups that might face headwinds, just those sort of speculations. I mean, the market is Speculation, isn't it?
Yeah,
At the end of the day,
there's so many
Justin?
variables to take into consideration. I mean, it's not even sometimes the election itself, but sometimes you see it in the primaries. I remember
Mm,
not too long ago when Bernie Sanders was kind of doing a little bit better in the Democratic primary, a number of years ago, and the effect that was having on health insurers, and you saw that with the 2016 election, as Hillary Clinton's, as people were kind of thinking, oh, this has really hit her campaign, and then you saw adjustments to the market based on that. But again, at the end of the day, you kind of have to wait for things to happen because otherwise it is just speculation. But you want to be on the right side of things, and I think this is where charts can help you, and
mhm.
at the very least, it can help you with determining where your risk levels are, because it's fine to speculate, but it's not fine to speculate without without any risk management skills.
Exactly. Yeah. Or seeing it show up in the chart.
Yeah,
Yeah.
right. Exactly.
Okay. Let's take a look at some sector uh, ETFs, the chips, Justin. Speaking of election related headlines, political related headlines. We actually had some news out of both sides impacting the chip sector this week, especially on Wednesday, whether it was on the export tariff side of things or Taiwan getting in the mix, crosshairs of some headlines, Justin. But SMH down 9.6% on the week, on top of all of this rotation out of tech that we were already seeing, and earnings from some key players in the group. So a lot thrown at chip stocks this week.
Yeah, a little bit of a perfect storm there. Look, this was one of the areas of strength, and you just really kind of saw a lot of the areas that were very favorable becoming unfavorable, and areas that had been out of favor starting to get favor. So yeah, I think you have to be just willing to take a break on this, and if you have a lot of if you have individual stocks where you have a lot of cushion, then this is where you consider, okay, what how do I want to handle this? Am I comfortable sitting through a downdraft? Am I comfortable with the drawdown? Am I comfortable with it lasting for a while and this potentially being dead money for me? Or do I want to do something to help mitigate that? And that can mean that you cash out on the position and then you look to buy it back later. Or maybe because of your, tax situation, maybe you want to keep the position, and so you're going to do some hedging. That could be either on the individual stock
Yeah.
itself with some puts. You could do it with the market, either the futures market or what some of the inverse ETFs. There's a
Yep.
lot of different ways that you can kind of help mitigate that risk. But at the end of the day, you have to kind of find out what works for you. That's going to depend on where you're at in your, I guess, life cycle. If you're a little bit earlier, maybe you can withstand the downdraft a little bit better because you have a lot of time. If you're looking at, down the barrel of a retirement, then your time horizon is much shorter, and you're going to have to be, making some different decisions. So
Right.
it's a very individual decision, but at the end of the day, something I think we all have to make and consider, hopefully before this kind of stuff happens. You kind of know how you want to approach it. But I would expect to see maybe some, somewhat of a pause here, and that is actually very constructive. It doesn't mean that the chips are over for good. I don't think this early on in an AI push
Yeah.
that's the case, but they could be done for a little while.
Hmm. Yeah. Some short term weakness here, no doubt. And the last base, along with the broad market, 10 weeks before that, we saw a
Mhm.
15-week consolidation. So, uh, just just something to think about.
Mhm.
Okay, let's take a look at XHB home builders. How did they fare this week? Up 3.2% on top. This is the XHB ETF, by the way, in full disclosure, I own it. On
As
top of
do I. Mhm.
a 4.3% gain last week, adding another 3.2%, Justin.
Yeah, so this kind of comes back to that 10-year treasury yield that we were looking at earlier.
Mhm.
This is one of the beneficiaries. Look, people were getting used to these very low interest rates, especially with their mortgages. And then, man, when those started coming up, it was like, you know, you didn't have the equal downdraft in house prices, and so it just made things a lot more expensive. So
Yes.
still a lot of pent up demand, and very little inventory in a lot of places. So yeah, that was putting pressure to the upside on home builders. And look, you could also look at the sector spider ETF, the XLRE. Which is the real estate. So, not only home builders, but you also saw kind of an up move in a lot of the REITs. There's a lot of REITs in this. Those are real estate investment trusts. So that was something that had a very powerful move as of last week, and that's been moving up nicely. So again, you have to be very careful not chasing these, even with some of these, looking like breakouts, because they're kind of coming up to previous levels of resistance. There were a lot of days up in a row. So you just have to still be very cautious when you see a big move like that very quickly. A little bit of a pullback like we've seen the last couple days is very normal, and you don't want
Right.
yourself to be caught in that because you're chasing something.
Yes. Okay, and let's take a look at XLP. This is the consumer staples, and the RS line here, pretty notable, Justin, after a powerful day on Wednesday here.
Yeah, and I do have a position in this myself, kind of a little bit of a hedge. This is a lot more defensive, but you've been seeing names like Coca-Cola, KO, Procter and Gamble, PG. These have been showing breakouts lately, and again, those relative strength lines going in a very vertical fashion to the upside. So this is something that is, again, typically on the defensive side when money is flowing out of the growth areas and getting a little bit more in that let's
Mhm.
hide, let's hide our money. We don't want it to be out of the market, but we don't want it to be in the high growth names that are more volatile and could do more damage. So this is a place where mutual funds and fund managers tend to hide, and it's been holding up better than a lot of other areas.
Okay, one more ETF to look at before we move on, and that is IGV, representing the software sector. So, like chips, software has been a leader in 2024, though not straight up or entirely. This area did take a break, but it was looking like it was roaring back, Justin. Now
Yeah.
we do have 2 weeks down in a row, down 2.8% this week. Today closing down just 0.2%. But after that 5 week move, we're retracing part of that, and we're still above the 50-day line. But it all goes back to what you've been saying over and over: don't chase.
Yeah.
And these digestions after strong moves higher are to be expected, and it looks like that's what we're seeing play out here right now.
Right. And I will say that there was kind of a little bit of a canary in the coal mine here, because on the day before things got a little ugly here, you did see ServiceNow come down quite a bit. It was a downgrade. This was actually not this week. This was last week. So before a lot of the stocks were coming down harshly, ServiceNow was down 5%. On a downgrade, and it was just a little weird, right, that it came down that hard, and that was kind of the start. Then you had the big reversal, and the small caps coming on strong and everything like that. So that was kind of the start of that turn, it seemed like. So a very worthwhile thing to look at. And look, we should also mention that one of the other big components in IGV is CrowdStrike.
Yes.
And CrowdStrike did some damage today. I mean, I personally
I'll
had
say.
about 4 hours looking at a blue screen, that just kept on restarting for myself. I
Wow.
know you escaped that because you're a Mac user, so good on you. But yeah, that was look. This actually looked not too bad a week ago when it
Right.
was coming down, and it seemed like it was getting support. But then as it undercut, whenever you get tight action, right, you kind of expect it to resolve itself one way or the other. This resolved itself to the
Yeah,
bad,
that was the
the
signal.
downside. So
That was the signal.
so
Hopefully
yeah, if you had an early, a more recent entry, I think as it broke on
Wednesday.
Wednesday, that was kind of your last chance to say, okay, this
Mhm.
is not working and more damage can be done. Now, no one
Maybe
expected.
Thursday.
What's that?
Maybe Thursday if you
Maybe
were
Thursday.
hoping for a bounce
Yeah.
around the 50-day
Yeah, but,
for the final
look,
piece.
no one knew that this was coming by any stretch of the imagination, but, looking at this chart, I did own CrowdStrike and I got out. There wasn't really much reason to
Mhm.
hold on to it because the risk was just a lot more than the reward at that point.
Exactly. So big ripple effect with the outage here for CrowdStrike, for now.
Couple other sectors to just kind
Yeah,
of bring up, if you don't mind. XLI was another area of strength where the relative strength was looking very strong. You had a lot of the material stocks that were showing some initial strength with XLB and even the miners and metals and mining XME. But again, those did kind of pull back as well.
retrace a
So
little bit, yeah.
yeah, it remains to be seen if this is something where this was truly rotation to these other areas, or was it kind of like one final, okay, let's hide here before we get out completely type thing.
Right. Yes. Good thoughts there. We've also been watching financials, Justin, another
Yeah.
area where money has been flowing. So here's a quick look at the XLF ETF. And of course, we know that the banks kick off earnings season each quarter, but it's not only the big money centers, it's also regional banks that have,
Yeah.
of course, with the interest rate discussion, have been of particular interest. Here's a look now. We're going to shift gears from finance to transportation equipment. So here's WAB. This is Wabtech setting up, heading into its report next week.
Yeah. So again, the tech is not so much technology here, but this is in the rail, right? Locomotives, freight cars, and this is a nice cup with handle here. So again, I'm looking at a lot of these companies that have come up to these old areas, and rather than try and chase them as they've had these big moves up to the previous areas of resistance, let's just wait for these handles to form on some of these. And I
Right.
think that'll be very telling, especially with a lot of stocks have this kind of look to them and they have earnings right around the corner.
Mhm.
So you could easily see earnings acting as a catalyst for some of these and taking it to the next level and potentially
Mhm.
having a breakout. So I like the setup here. You've got the relative strength line going in the right direction. So now it's just a matter of, I think, waiting until that earnings report to see if the catalyst comes.
Right. And I think you make a very important point because for a lot of traders that have been, uh, taking profits in the rotation or moving with the rotation and putting money to work elsewhere or getting caught in this week's downdraft, and we're going to talk more about the precedent work. But if you take that step back, yeah, and hedging too, we've talked about hedging
Mhm.
over the last week. So even if maybe traders aren't 100% invested right now, maybe they're more 50, 60, 70% invested, what have you. It's I love how you always say it's not time to get your canned goods and go to the bunker just
Uh-huh.
just yet. We want to keep these watch lists fresh because earnings season,
Yeah.
we don't know what's going to happen for the broad, S&P 500 as a whole, or whatever you want to take a look at on balance. But even for individual names, earnings season can change everything, and
Yeah.
it's hard to predict what exactly will happen. We just got to be open for those different scenarios.
And sometimes the earnings season will have, each season almost has its own tone. You kind of get that sense pretty early on. The banks, as you mentioned, start it, but then you pretty soon get your big cap companies like Microsoft, Google, and and then you kind of start seeing, okay, how is the market reacting to the earnings reports? How is it reacting to guidance? Is it a little bit more forgiving? Is it a little bit more punishing, and that can kind of also give you a sense of, what kind of market you're in. But, there's a number of kind of these sentiment things, how do you open in the morning and how do you close in the, in the afternoon? Those kind of things can all help you kind of gather what kind of environment you're in. But at the end of the day, as you mentioned, this isn't the grab your cans and go to the bunker. We are still in a power trend, and that is still intact. Yes, we are in a pullback, but so you might not be as offensive and aggressive right now. You might be more on the defensive side, but overall, we are still in an overall long-term uptrend, and that has to be remembered.
Yeah. We'll keep our eyes peeled. Okay, let's take a look at APPF. We actually covered this last Friday, so we're circling back now. We got a breakout for this enterprise software stock, and now it's been a week trading sideways and going tight. And in a week like we had this week, that means an improvement to the relative strength line, Justin, which is now, I believe, it's right at highs for the stock, and earnings coming up next week for AppFolio as well.
Yeah. And I do have a position in this myself. I actually was watching last week, and I thought it looked pretty good. So I'm in this one. And look, I don't mind the fact that the tight action is happening right now. I might not hold it through earnings. What I might do is I might switch that to either like an option play or some other thing if I don't have enough cushion to withstand a potential earnings report. But as you said, what's good about this is we're getting a lot of stocks here that are setting up right ahead of their earnings. And as much as we've kind of talked about software and tech being a little bit on the outs, this does have that kind of, it's in the, small, medium-sized businesses, cloud software for property management. And so that, when you kind of combine that with the XLRE, well, that kind of gives you a different feel to this. So do be looking for those companies that maybe have exposure to different things. This was something that also David Ryan brought up with a company that he was looking at, SBRA. It's a REIT, but it's in the long-term healthcare. So if you're wanting to take advantage of demographic trends, in terms of an aging population, and there's something going on with real estate, well, this kind of merges the two. So be on the lookout for those things where you might see something that is a little bit different from what you would expect on a certain stock.
Well said. Let's go now. Speaking of banks, we're going to go to TBBK, the Bancorp. This is a Northeast bank and a powerful move in recent weeks, Justin. We've even got the ants here. So that underscores not only the great number of up days versus down days that we've seen, only 2 down days since... when was this? I'm going to do my track price. Only 2 down days since mid-June. So in a month, it's had 2 down days, and volume behind the gains. Volume's been strong here. So this is another stock of interest with earnings next week.
And it's also a warning to not chase. When you've only had 2 down days, that's actually why I brought it up, because yes, the ants, this indicator is basically showing you real power and volume behind it too. This is not something that you want to ignore, but at the same time, sometimes you don't want to be buying the stock when it has those signals, because it's kind of due for a pullback. And so that's what I'm looking at here for the Bancorp. It's again, a great, powerful looking move that it's had this last month. But, the relative strength line has soared. All of that is great, but it would be nice for this to take a little bit of a pause. And I think that could give folks another opportunity. And no big surprise, this does have earnings coming up. So if this can just kind of hold tight right here for a few days, earnings could be that catalyst that kind of gives you another chance to enter into this stock. So the ants indicator is great sometimes for putting something on your radar.
Yep.
You let it stew a little bit, and then you can buy it.
Right. And this is actually a question that we get a lot. How can you say a stock is extended when it's in a buy zone?
Right.
Well, In addition to looking at where a stock is versus a prior high or resistance level, and for this stock, it was going back to January, then corrected about 36%. And now the last couple of months, it's come back up, 30+%. I like, and we like looking at where a stock is in relation to its moving averages. So
Right.
for this stock, you have the 50-day 34% away. You have the 21-day 16% below the stock. And even the 10-day, the shorter term 10-day moving average, this stock is trading almost 9% above its 10-day moving average. So in addition to looking at pattern recognition for buy points, seeing where a stock is in relation to those moving averages is something that's very helpful for looking for entries or even taking profits into strength. And the other thing I like to do, and I know you do too, Justin, is look within the base itself. Was there a lower resistance area that you could have traded off of before the stock takes out that prior high or prior official resistance area? So a couple
Yeah.
of tips there.
Absolutely. All great points, Allie. And, unfortunately with the Bancorp, it didn't really, with only 2 days down in the last month, it really didn't give you that opportunity. But like as it got up to 40,
Right.
that was kind of maybe one area that you could have looked at right there. But yeah, excellent points. The moving average lines, and remember that 10-day moving average line, it probably isn't extended as it was just like a couple days ago. Because even the
Yeah.
last 2 days has kind of let that 10-day line catch up to it to a degree. So yeah, be looking at those moving average lines. It kind of gives you a sense. And remember, Bill O'Neill, the founder of Investors Business Daily, as he was going through model book stocks, these best performers from each market cycle, he would often look and say SUFB straight up from the bottom. And that was kind of a warning to him. Hey, wait for it to pause before you do your entry. And a lot of those did. It might not have been much of a pause, but you get some type of pause a lot of times instead of it coming straight up from the bottom. And that does give you another chance to kind of use tight action to get in as opposed to something that is very volatile and stretched.
Right. And another reason why we like looking at the moving averages for buy signals is because they're also helpful sell signals.
Yes, right.
So seeing if a stock finds support or breaks a certain moving average, that's how we manage risk.
Yeah.
So
And you've got to imagine if a pullback to the 50-day moving average line is a very normal thing for a stock to do you really want to buy it when it's 33% above its 50-day moving average line?
right.
Are you able to, now granted, the likelihood of it going down that far that quickly, most likely the 50-day moving average line will move up to greet it. But still, that's one of the things that does make me say, okay, how much can I afford to lose if this does pull back to the 50-day?
Exactly. Yeah, it's just a timing thing and an odds thing, and comes down to risk management. Okay, now that we've taken a look at all of those stocks, let's talk about some of our precedent work. Justin, shall we? What do you think?
Yeah, absolutely. One of the things that we were looking at in terms of precedent was, two very strong markets that we had. Look, 2022 was a bad bear market. It was maybe not as dramatic as the bear market that we had after the .com crash. Maybe it wasn't as scary as the great financial crisis, but it was pretty persistent and it was pretty tough on a lot of portfolios because of just how the grind down just kept on going. And let's not forget, you had things like ARK-K, that were down 70% or more, 90, some of these stocks were down 90% from their highs after COVID. So if you look back to let's go to 2003. Let's go ahead and
Yeah.
start at 2003.
We'll go there
Um,
first, but first, okay, we'll show the daily and the weekly of the
oh, good
current.
point.
So get this in your mind.
Right.
With precedents, we're looking for a potential blueprint for what could be. We're not looking for an exact, crystal ball, right? But just it's scenario analysis. So, hey, this is what happened in the past. How could that potentially inform what we're facing right now. So here's a look at the weekly chart. You can see the type of bar that we had, power trending market. We are still above the 10-week line, but a pretty big bar here. And then the daily chart, we have 3 down days in a row. We are below the 21-day line, and that's shortly after hitting highs. So yeah, now
And
let's
let's just kind
go
of,
ahead.
before we move, let's just kind of remind folks of kind of how this played out. Remember, you can't quite see it, but there were 3 waves down. We had our follow through day on November 1st. We really just kind of, yeah, there we go. There's our 3 waves down. Really just followed that 21-day moving average line all the way up. And then we had a pretty dramatic drop below our 50-day moving average line, came right back, started following that 21-day moving average line again. And now it seems like we're coming back down to the 50-day moving average line. So, and then again, as you said, Ali, 3 days down more recently as we kind of got through that 18,000 level. So yeah, now let's go ahead with that picture in our mind. Let's take a look at 2003 and kind of see how that played out.
Let's do it. I was holding off a sneeze. All right.
Okay.
So here we go. We've got the 3 waves down, and we don't need to belabor this. We've talked about this in past Friday Stock Market Today videos, but just, to catch people up to speed, 3 waves down, power trend, then a break, not quite as bad of a break as what we saw in April, but a break indeed. A rally up, a downside reversal, got above that, holding above the 21-day line. And now here we go, 3 down days, closing at the lows of those days and below the 21-day, coming down to the 50-day. Justin, over to you.
I don't know what else there is to say. I mean, that's pretty compelling. Now, I will say the one thing that is, it has shaken us a little bit at times from this precedent is we, when we came down through our 50-day moving average line, we did do it in a very different way. And we were, Mike Webster and I, which, by the way, happy birthday, Mike. He's on vacation today.
Happy birthday, Webby.
Yeah, happy birthday. It did come down, and it, in 2003, it was a little bit more mellow, as opposed to, remember how, sharp that was in the most recent. And then as we kind of recovered from it, it seemed like we were getting a little bit stretched for longer, going up for longer. So we were kind of expecting, well, we had a number of these situations where we thought we were going to get a pullback. We were getting extended, but then we turned around and just got extended again. So yes, we're maybe a little bit more, later on some of these, or coming down deeper, or going up more than we expect.
But hey, history rhymes, right?
There you go. Exactly. It's not going to repeat exactly. You can't just go by a day-by-day exact percentage gain or loss. But it does have that same kind of feel. And this is one of the things that we were kind of, telling folks. The reason behind this precedent was just to kind of have in your mind that we could have a lot of these situations where we get back up to highs and we pull back to the 50-day.
Exactly.
We get back up highs, pull back to the 50-day. So it might not be as easy as it was to start the year.
Half. Yeah.
And from that November 1st, and even, the May to July here, it was pretty powerful for a while there, but we just might get into some of these shorter and quicker moves to the upside and downside. And so it's just something to be ready for.
Right. And we always, each next week is key because we're active traders, So I feel like that's what we always say. Next week is going to be key if it's going to confirm our expectations or break our expectations, and we'll adjust accordingly. So I almost chuckled at myself saying next week is going to be key because we said that last week, and we probably said that the week before and the week before. But again,
more data, right?
We're active traders. So each week is going,
and a lot of times, while we do try and be proactive in our decisions, and what we can expect to happen, we are generally reactive to what does happen because we want the market to kind of lead us rather than us trying to tell the market where to go, because that just doesn't work that well.
Yeah. And not having a knee-jerk reaction. And it's all or nothing sort of decision. So when I saw the 3 days down, and I thought to myself, I wonder what the 03 precedent, because that's been helping me all year long, or really since November, it has been helping me. Precedents can hurt you, though. Charles Harris has talked about that, and we don't
You
want
have
to
to
be
know when to
overly
stop using them.
reliant. Yeah, we don't want to be overly reliant. But again, it goes back to that scenario. Okay, has this happened before, and what happened next? Could otherwise, maybe I would have gotten overly defensive preemptively, right? If we do get a bounce or some support at the 50-day line, doesn't mean we're gonna at all, but helps me calm down a little bit after some of the damage that we're seeing out there this week. So
Yeah.
we'll have
And
to
you know
see.
what? Let's just, while we're talking about precedents, if you just go to 2009 real
Mhm.
quick.
Yeah, and I just want to show the weekly
Oh,
too,
okay. Yeah. Good idea. Good
before
idea.
we move
Mhm.
off. It's actually a little hard to see. I don't know why, but
Some of the
it's
moving
because of
average
those RS
lines,
moving averages.
RS lines. Yeah.
Yeah.
Kind of moving into
I
it.
wonder if
So
I could take a look at the Qs, if that would look similar.
yeah, a
No,
little bit better.
I don't know why. It was let me see if I can go back a few weeks, see if it helps at all with the scaling. Nope, it's anyway. The bars look very similar on the weekly. You got that break bar, and then this week's bar looks very similar to that week of, I want to say it's September 26th. So if you want to go and look at your own charts. Okay, so now let's go to '09. When in '09 should I go to the end of
You
the
know what?
year?
That's fine. Just go right there.
Okay, we'll go
Because
right
again,
there.
the main thing here to see is how we again had that strong thrust to start.
Mhm.
Now, one of the differences here is that we were below that 200-day moving average line for quite a while. I mean, this was one of the cases also with the 2003. We were below that line initially, and so that is one of the differences between this market and those markets. In 2003, we did get above it pretty quickly, but it took a little bit longer for the 2009 because of the amount of destruction that happened.
Right.
But we did trace above that 21-day moving average line. And then after that first touch of the 50-day moving average line, you did have a stronger move up, and you didn't quite come down to the 50-day moving average line for a while. But then you were getting these pullbacks, each time you went to highs, you were kind of getting these pullbacks. And so that's just something to be aware of, something similar and something that, you should be prepared
Mhm.
for.
Right. Okay. Well, now let's take a look at the present day, and we want to take a look at some stocks that are showing positive traits, perhaps on a closing range basis,
Yes.
right, Justin?
One of my favorite things to do on weakness is to look at some of my screens, and I use Market Surge, and I will put in a daily closing range to kind of just tell me. And this is something I run throughout the day to tell me which stocks are holding up a little bit better, even if they're down, if they're up off their highs. And so this is Webby's 21-day screen. Very simple. We're looking for current price above $10. We're looking for the 50-day average dollar volume being above 75 million. We want the price to be above the 200-day and the 50-day. We want that 3-month relative strength to be above 80, as well as our 12-month relative strength. We also want some fundamental strength in there too. So we want a comp rating above 80. And then also we want our moving average line stacked appropriately. So our shorter term moving average lines above our longer term moving average lines. So the 50-day above the 150-day, above the 200-day, and our 10-day above our 21-day, above our 50-day. And ideally, we want to kind of see the price around the 21-day moving average line to kind of see if we're getting support there. Now, if we start losing support there, guess what you could do? You could just change this to the 50-day and say, oh, let's look at negative 2% or plus 2% from the 50-day moving average line. And if you're not coming up with very many names, you can always add more by just expanding your range a little bit. So that's one of the great things about looking at this right-hand side, and you kind of see the waterfall and you see, oh, this is where I'm kind of losing names. Okay, well, let me, hey, there's only 89 names if I want to look at everything. without having any range around the moving average line. So you could do that and just take that last thing out, or you could do it to the 50-day moving average line or expand the range. So let's just go ahead and take a look at these 18 real quick and see what it comes up with.
Let's do it.
And since we are at the end of the week, let's go ahead and take a look at the closing weekly range and see, see what kind of was the strongest. And there we have Coke.
Staples.
Yeah. So the some staples. We have Transmedics Group, which was, also in kind of the medical area. So XLV healthcare. We've got banks. That's a foreign bank there. So that one is, looking very strong. Aviation and the aerospace defense. So again, we could be looking at the weekly charts in a lot of these cases.
Yeah.
So again, you're seeing that a lot of these, the closing range is pretty poor. The closing range is pretty poor. So that does kind of give you a sense of what's been, what kind of damage was done this week. But again, what you could do is you could take out that last component and see if there were anything that had better weekly closing ranges, or you could shift this to the daily and see if there were things that were today that had some better closing ranges. And Lennox International, that was one we didn't go over, but it came up on the daily side. Still down, quite a bit off its highs for the week, but a little bit of support here and getting support at the 21-day moving average line, because again, that's what this screen is there for. Do you want to do a quick change and just see if we can change it to the 50-day and see if that comes up with anything else?
Yeah, let's do it. So yeah, we kind of called an audible on pulling this up right before. I mean, Justin was without a laptop for half the day.
I did half the day. And then there was some work I had to catch up on.
Yeah, exactly. Okay, so we also have this one here too, price versus the 50-day. So since we want to do it plus or minus, so we'll take this out. So we'll take price versus the 21-day out. And then price versus the 50-day, we want to do the plus or minus.
Right. Exactly.
Okay. Price versus 50-day. Here we go. Okay. So we'll do the -2 to 2. How does that sound?
Yeah, let's do that.
Okay.
And we'll see what we come up with. And if we need to make that a little bit wider, we could do that.
Okay.
Oh, see, only 3 right there. So,
yeah.
a little bit, and you can see again where the waterfall really kind of narrowed there. Let's go ahead and just take that out completely.
Okay.
And we'll have a broader list to look at.
And then we'll do
actually keep it at 0. Keep it at 0.
Right.
So we want we'll keep things that are above their 50-day. And so that's where the 89 comes from. Let's see if we see anything with a better weekly close in this expanded list.
Let's do it.
Oh, so now we have Murphy USA. So, wow, that's something that, is extended. So again, before we were kind of limiting it to things that were close to their moving average. This is just showing us flat out strength, right? So that's kind of giving you some information as well. KMI, that's in the oil and gas. This is, again, this kind of tells you, hey, there is still strength out there. New Holdings, another bank, foreign bank. That is also, looking pretty sharp. FCNCA, this is one that actually leaderboard they were talking about a little bit. Want to understand a little bit more of the fundamentals, given that this is something that absorbed Silicon Valley Bank. Cintas, I have a position in Cintas. This is a long-term leader. Look at that EPS growth of 15% and an earning stability of 3%. So you look at the monthly chart on this one. I wouldn't suggest getting into this one at this point.
Right now.
You tend to want to do the long-term leaders at pullbacks, but it does show you where some of that strength is. So again, there's a lot of different ways that you can slice and dice the market to kind of find out what was going on in a given day, a given week, where the strength is, because as you run these screens and kind of look at it these different ways, you'll start seeing the same stocks or the same groups come up over and over. And that's important information for you to use.
It sure is. Okay. Well, thank you so much, Justin. Any just final closing thoughts on looking ahead to next week and how we should be positioned for that. I know one thing in terms of what I'm doing is I'm going to be out of the country for a week. So I will miss you all.
Preparing your portfolio for that, huh?
I will be preparing my portfolio for that. So, but at least I
And what
will
are you doing
be.
in that regard to prepare your portfolio?
I have pared back. I'm trying to just keep my key holdings that I have big weightings in and big profit cushions in. And then I'm going to be setting some stops that aren't too tight, aren't too loose, trying to find the Goldilocks
Mhm.
of a stops for next week. So, and then just keeping a watch when I can on some of the other names that I own, but making sure that I'm in a good position. I don't just want to leave open a bunch of risk heading into next week.
Yes, and then you're going to come back with a lot of Peter Lynch type information for us on
Yes,
what stocks we should be buying based on your travels, right?
exactly. Yeah.
Yeah,
So can't wait to
perfect.
share. Can't wait to share more when I'm back. And I'll be coming in hot for the big earnings week. Gonna miss a little
Yes,
bit next week, but then we've got
just in time.
the big week in 2 weeks' time. So, but
Well, have
anything
a
else?
great vacation.
Thank you. I know I'm gonna miss everyone, but just final thoughts on heading into next week.
Yeah, so definitely, I think whether you're going on vacation or not, you should be preparing your portfolio. If you feel like you didn't do enough selling this week, look for some opportunities to do some more. There might be some bounces. You often, just like we saw with the Nasdaq, how it had the 3 days of kind of tight action before you got another whoosh down. You can expect that to happen a lot of times. So be on the lookout. If there's some stocks that you want to get out of, you might want to sell some of those into strength if you can. If things just keep on getting worse, though, don't get a deer in the headlights type of reaction and wait for those bounces. Make sure you have your lines in the sand. And
Yep.
this is a good time over the weekend to be doing some soul searching. How do you want to handle your portfolio? Which stocks do you truly believe in, have the conviction in, and you're willing to take more of a drawdown on? And
Mhm.
which ones do you not have the conviction in? Because the best way to hold some of the stocks you have conviction is to have extra cash or hedges
Yep.
that give you that confidence, because it's a whole different thing when you've got everything coming down on you. That just puts way too much pressure. So if you can relieve some of that pressure with the stocks that you don't have the strong conviction in, so that you can hold your strong conviction stocks, that'll be much easier for you. So do some soul searching this
Yeah.
weekend. That's your homework.
Yeah, there you go. And I'm on the same page. And I forgot to mention I do have some hedges on too. So uh a
Very good.
lot to think about before I go abroad, but all good stuff. Thank you, Justin, and thanks to everyone for tuning in. That is it from us for today. Next Friday, you will be covered by Justin and Webby with his return. So you're in good hands all week long with the IBD team, whether it's IBD Live, Stock Market Today, Swing Trader Status Update, our podcast, or earnings cheat sheet. We've got the full lineup for you. So check out more at investors.com/videos or our YouTube channel for all that great content, or Spotify or Apple Podcasts, whatever your listening platform of choice is for a number of our shows. So that's it, everyone. And the team will see you back here next week.